Good afternoon, ladies and gentlemen. How are you? Welcome back to live talk show. Today, I'm sorry, Biza is quite busy, so I would like to do this sharing alone. But don't worry, tomorrow I will do the same content together with the Biza, and then he will do the translation nicely to you. Okay? Okay. By the way, yesterday, speaking about the dollar-yen market was very hectic. And then this hectic price movement gave the impact to your gold trade as well. Let me briefly summarize what was happened yesterday. After jolts, 9 o'clock Cambodian time, jolt's result came out, right? And then the actual figure is much bigger than the expectation. So dollar went up and broke 150 yen. $1 equivalents to 150 yen. And then so many times I shared with you, if the price of the dollar hit 150 yen level, there is some big worrying about the Japanese government intervention. The Bank of Japan will do the intervention. And exactly after 2-3 minutes of the Joe's announcement, I think this was the intervention by Bank of Japan, and then dollar price went down more than 3 yens within 2 minutes. Very drastic fall down we saw. But still, we cannot say that this is a Japanese government intervention or not, because even the financial officer, or Mr. Kanda, he is not allowed to announce that this is an intervention or not. At the end of the month, Japanese government will announce whether this was done by the intervention or not. But it's quite obvious this is done by intervention from Bank of Japan. Okay, so now the current price is below the 150. So if this price go up again to hit 150, maybe Bank of Japan will do the second intervention. Think about the previous, intervention. Japanese government, Bank of Japan, spent nearly 110 billion US dollar to push down the US dollar. In other words, they sold 110 billion US dollars and buy back the Japanese yen. I think this type of intervention will be occurred or not. I'm sorry, I'm not for sure at this moment. Okay, but most likely, if the current price hit again 150 yen or higher, maybe second intervention will be occurred. Okay. I expect, yesterday, Bank of Japan, I think they nearly used at least 30 billion US dollar to push down the US dollar's price, nearly 3 yens. Okay, so in order to decrease the value of the US dollar for 3 yen, maybe they spent at least 30 billion US dollar. They sold 30 billion US dollars. Okay, and end of the month, Japanese government, particularly BOJ, they have to announce to the public and showing the current account balance of the Bank of Japan, so we will know whether they spend 30 billion or 50 billion or 50 billions or so, okay? So from the account balance, we will know whether they did the intervention or not. And also, Ministry of Finance, they have to report to public whether they did the intervention or not. But as far as yesterday's price movement, price action, I think that was done by the intervention. Okay, anyway, so today I would like to share with you about the price movement. You heard many times about the price action, right? There are hundreds of times of the price action, the pattern, trading patterns called the price action. And it's quite difficult to memorize all the patterns and apply these patterns into your ongoing trading. But today, as I promised to you yesterday, together with the visa, I would like to teach you, share with you some basic knowledge about, let's move on to my PowerPoint. I said expected price movement, okay? Price movement, how whichever the currency pair, a price will move according to a kind of theory. Okay, so I would like to share the typical patterns, typical movement of the price. Okay, so please pay attention here. Okay. This is the current price, okay? Maybe, let's say gold, okay? $1,900 something, okay? Per troy ounce. So current price is $1,900 per ounce, okay? And if the price go up like this, okay? Of course, if you're a buyer, you will enjoy the floating profit. You're very happy, right? Every dollar you gain the profit, okay, as a floating. But of course, if you're a seller, you're not happy. So you started to think about stop out. So seller side will place the order to get out from the market and realize the loss. We call it stop loss buy. Don't misunderstand, okay? This is not new buy order, okay? So seller side want to realize the loss because they cannot afford the big floating loss. So they would like to place a limit order to cut your loss, okay? So I said sell side cut loss the position. You understand, right? I would like to repeat. If you're a buyer, no problem, okay? Just enjoy the good, beautiful floating profit. But if you are a seller, unfortunately, you have to set the stop loss. That time, you're a seller, so if you want to realize the loss, you become a buyer, okay? Understand, right? So, if we see a bunch of, such a stop loss buyer, sometimes big prime broker, they will do the stop hunting, okay? They know so many stop loss orders are placed on the gold market. So if the price is just before the stop loss order, sometimes they will boost up the price and then realize and execute these stop loss orders. Can you believe? And then price will go up more, okay? And once the price go up to a certain level, then big sell order will be placed into the market, and then price will coming down. I think you have many experiences. Once your order stopped out, price come back, go up or go down, and then you feel big regrets, right? Oh, I shouldn't place a stop. If I wait for another 1 hour or 2 hours, you see, the price definitely came back. But it's the past story, right? That moment, particularly on that moment, you cannot expect, because you are in the market, and then you cannot expect maybe up or price will come down or come back, okay? But you have to place the stop order. But don't worry, okay? Market will never be running away. The chance will come back. But unfortunately, your stop was executed. And after stop executed, more price will go up. And then that level, the new order, big seller order, will place a lot of selling order, okay? So this is a movement of the price, okay? Current price go up, go up, go up, and then your stop loss order executed, and then more up, And then once the price reached to the nearly peak, you see, the seller, new seller, okay, new seller will start to place the order. And then because of the sell, price will going down, right? Price going down, going down, going down, going down. And this will be the future price expected. So this is a typical the trend. And so many people got suffered from this kind of a stop order. But don't misunderstand, okay? Always set the stop. The stop means realized loss, right? You can expect. That is a reality. Don't expect that the price will come back or come back to up to the price. Okay, always seek the reality. Okay, now just I mentioned about the gold trader of the seller side. So what about the buyer? Okay, now we are here. 1900 something, okay? You place the buy order, but unfortunately, price coming down like this. And then again, stop loss sell. So this stop loss sell is a buyer stop loss, okay? Will be executed. That time, you see, speed of the executing will be very fast. Because of the, we call it stop hunting, okay? So after that, price will further down. And then if the price coming down to nearly peak bottom, okay, new buy order will come into the market. And then price will recover and then come back to the something like an original price. I think also you experience this. Once you set the stop, and unfortunately your stop loss executed, and after that price come back. You feel regret, right, to place such a stop loss order. But realistically, practically, I do recommend you, no, I do ask you to set the stop, okay? The stop, you can calculate how much you can afford the loss. But your expectation to gain back the money is your expectation, your emotion. Emotion cannot be a work on this derivative market. Always rely on the reality. Now you got the $100 of floating profit. That is a reality if you realize that the $100, okay? But don't think that the price will go up more, maybe 200. Maybe 300, okay? Maybe price will hit another new high and another new high. In that case, I will recommend you to do the trading stop order, okay? This is a really good system, okay? Once you set the stop and if the price go up, this stop level will go up. So automatically your, the profit will be confirmed, okay? So like this, you can use this kind of system fully to protect your asset, okay? Never ever expect to do some trading by your emotion, okay? Reality is there. What you can get is what you see is what you can get, both for profit or loss, okay? So in order to do the very good margin control, I would like you to realize this kind of typical price movement today. And tomorrow, when Visa come back from the meeting, I would like to do this same content to you, and Visa will kindly share this information in Khmer language. But meanwhile, stay tuned with us, and